Vanakkam. Now, today I am going to talk about the very important thing that FEMA of 1999 deals, that is external commercial borrowing. What are the rules and regulations that you have to follow? What are the important items that you have to see when you are getting the money through ECB, that is external commercial borrowing? And before going to the presentation, I want to say my disclaimer. The views expressed by me in this presentation is my view. Please, for clear understanding of the matters discussed, I request you to go through the FEMA 1999. I am not responsible for any wrong interpretation. With this disclaimer, I am presenting the subject for your easy understanding. And what is ECB? ECB means external commercial borrowing. It's a commercial loan raised by eligible resident entities. That is, the eligible resident entities is in India. They have to receive the ECB from a recognized non-resident entity. That is, resident receiving the money through ECB from recognized non-resident entities. Here, the parameters is it is applicable in total, that is minimum maturity, and whether it's a permitted use or non-permitted use, and what is the maximum or in cost saving. So this point we are going to discuss in detail, and it's a commercial loan that you have to see. What is a commercial loan? Commercial loan is a business loan and not a consumer loan. And it's a term loan and working capital loan, LC, BG, lease to finance, collateral-free loans, credit card loans, buyer's credit, supplier's credit, securitized instruments. These are all coming under the category of commercial loans. So for commercial loans, the recognized residents are eligible to get the money from recognized non-residents. So this is the classification with reference to commercial loans. And also you are eligible to get for the trade credit. Normally trade credit, when you are buying the goods or services from abroad on credit, that is coming under the category of credit, but without making any cash or check payment. But the payment has to be made on a particular scheduled date to the supplier. So this is coming under the category of trade credit. And now this ECB or trade credit is a capital account transaction and it is not freely permissible. So everything has to be regulated by Reserve Bank of India. But ECB is not applicable to investment made by FPI, that is for fund portfolio investors in non-convertible debentures in India. So FPI is not permitted to make in NCD by way of ECB. Lending and borrowing in ECB. So who can do this? Indian banks and other branches and subsidiaries which are situated outside India, they are eligible to lend and they are eligible to borrow in ECB, but everything should be within the prudential guidelines of RBI. So that means everything they have to follow the RBI guidelines. And for others in ECB, that is other than the banks, other than the branches of other, outside India, that is ECB person who are receiving the ECB, they have to follow the concerned sectoral or prudential regulators rules and regulations. Then only they can lend and they can borrow in ECB. There are two routes wherein you can get the money by way of ECB from the overseas. One is automatic route and second one is approval route. So through these routes, you have to borrow. So automatic route means it's a general permission given by RBI, you can do it. And approvals for each and every transactions, you have to get the approval of RBI. And what are the cases that is eligible borrowers under the automatic route? So first we are going to see the automatic route. So the AD means authorized dealers. So the authorized dealers, they have examined and they say that the following persons are eligible to get the ECB under the automatic route. Here we are going to discuss about the borrowers. So a corporate can borrow by way of through ECB. That is, that borrowers corporate should be registered under the Companies Act, but the financial intermediaries, they are not included in the eligible category. So banks, they can get the ECB, financial institutions, housing finance companies and NBFC, NGOs engaged in microfinance activities. A very, very important thing. Suppose if any NGO, if they have engaged in microfinance activities, they are eligible to raise the ECB, but the unit is situated in special economic zone. But this amount of ECB they can receive, but only for their requirement, and they are after receipt of ECB, they are not supposed to lend or transfer the money to any sister concern or to any unit in domestic area. So whatever funds they receive, SEZ units, whatever funds they receive, they have to utilize only for their requirement. Next one is who are all not eligible. So we have seen the eligible borrowers who are all not eligible is individuals, trust, and not organizations. They are not eligible to receive the ECB. That is automatic route. And the automatic route, there is a recognized lender. So far, we have seen the borrower, then who are all eligible to lend from the international market. That is from the international recognized sources. They can give the money to the person in India through by way of ECB. ECB means external commercial borrowing. International banks, international capital markets, multilateral financial institutions, which includes IFC, ADB, CDC, and export credit agencies, supplier equipment, foreign collaborators, foreign equity holders other than the overseas corporate body, and everything is subject to the minimum holding of equity in the borrowing company, and overseas organizations and individuals, and borrower is not allowed, but lender is allowed. So overseas organization, so individuals, and in the previous slide, we have seen that ECB is not eligible to be, to get the money, borrower is not allowed under the category of individual and trust. Whereas point number 7, the overseas organization or individual, they can lend the money through by way of ECB, and everything is subject to RBI norms. And what is the amount and maturity? You have to say the amount and up to $50 million if you want to get by way of ECB. Yes, it is allowed, but the minimum maturity average period of the loan is 3 years. So within 3 years, you have to repay. If the amount exceeds $50 million or equivalent means here they have put as $50 million. Suppose even from the pound, way of pounds also you can get. Even from Swiss franc also you can get the money, but everything should be equivalent to the $50 million. Up to $50 million and above $50 million, up to $50 million, the MMAP, that is minimum maturity average period, is 3 years. If it exceeds $50 million, the minimum maturity period, average period is minimum maturity. That's it. Maximum it is allowed. So it is 5 years. And now what are the costs that you can consider for the ECB? That is rate of interest and other fees and expenses that you have to pay in foreign currency. But this is except the commitment fee, prepayment fee, fees payable in INR, that is Indian rupee, and withholding of tax in INR. That is not included in the cost. The cost of this has been reviewed regularly and from time to time by Reserve Bank of India. So cost also they have given importance, and the end use, that is where to use this ECB, that is very much important, because if they use in a different manner, different purposes, then automatically our economy will be spoiled. That is, economic condition will not be having sufficient growth. So the RBI has clearly pointed out that is through FEMA, the money has to be used only for the investments, that is such as towards import of capital goods, towards new projects, and modernization and expansion of the existing production in real sector and industrial sector, including SME, infrastructure, and sector in India. And here the infrastructure is defined as power, telecommunication, railways, roads, including bridges, seaport, airport, industrial parks, and urban infrastructure, that is water supply, sanitation, and sewage. Here normally it's a role of the government to provide the infrastructure to the public. But other than the government, by way of ECB, these services you can give. So this is the first end use. And second end use, it can be utilized for overseas direct investment in joint venture and wholly owned subsidiaries, subject to the existing guidelines on direct investments in JV and WOS abroad. Invest in the first stage of acquisition of shares in investment process, and also in the mandatory second stage offered to the public under the government disinvestment program of public sector unit shares. And NGOs engaged in microfinance activity, yes, in that also you can use it. And lending to self-help groups, they restrict only to lending in self-help group or for microcredit or for bona fide microfinance activity, including capacity building. That's why in recent times, the microfinance has got a tremendous growth because they are eligible to get ECB. That is, but these microfinance activity should be managed or should be done by the NGO. And what are the purpose for which you are not supposed to use the ECB is on lending, and you are not supposed to invest in capital market, and you are not supposed to acquire a company in India by corporate, real estate business, working capital business, general corporate purpose. And you are not supposed to use the ECB to repay the existing rupee loan. This is a very, very important thing. You cannot borrow by way of ECB, external commercial borrowing, and to repay the rupee loan, that is not permitted. And the guarantee, yes, it is possible. For guarantee also you can use it. This issuance of bank guarantee, LC, LG, that is letter of comfort by banks and NBFCs, but financial institutions are not permitted to get the guarantee. And security. So suppose to avoid the ECB, what is the collateral security? What is the security that you have to give? But it depends on the decision and discretion of between the lender and borrower. If the lender says, okay, you give only this security, he can give. Borrower says that I'll give only this security. Yes, it is also permitted, but it's a decision to be taken jointly between the lender and the borrower. But in case of immovable property and shares, the charge has to be created with the appropriate form. With reference to immovable property, the charge has to be created before the registrar, sub-registrar or registrar office of the concerned state, and shares have to be marked lien. And they lien, and it has to be informed to SEBI. So this is a way of automatic route with towards the interest. Sometimes you have applied for the ECB. ECB has been sanctioned, but the purpose is still it has to be used. So there will be a delay in usage of ECB. So the borrower, he can park the funds overseas. Still, the same is actually required in India, and the following investments are permitted. One is deposits or certificate of deposits or other products offered by banks rated not less than AA minus by Standard or Poor or Fitch, IBCA or AA3 by Moody's, and deposits with the overseas branch of authorized dealer in India. That is, if the authorized dealer's overseas branch, you can make a deposit. Treasury bills and other monetary instruments of 1 year maturity having minimum rating as indicated above. See that the funds are easily liquidated. Suppose in case if the borrower wants the funds immediately, it has to be easily liquidated as and when the funds are required by the borrower in India. So here the liquidity of the deposit is very much important because the purpose is being delayed because immediately the funds are not required. So you can park the funds outside India. And prepayment, yes, it is also permitted up to 400 million, but prepayment is permitted without the suppose up to 400 million pre-permission, that is pre-closure or prepayment of ECB is not required. That is RBI's permission is not required, but authorized dealer, they can permit the prepayment, and it has to be done only after the minimum average maturity period is as applicable to the loans. And the refinance, yes, you have got the ECB, but whether you can avail the refinance, yes, refinance is availed. It is permitted by under the automatic route and refinanced by fresh ECB, which is subject to the condition that the fresh ECB is raised at a lower in all costs. Suppose if the rate of interest is 18% and if the present ECB rate is 12%, yes, you can refinance it. It is also permitted. The government is giving, RBI is giving permission. You can substitute, even indirectly, we can say that it's a takeover loan. So just like a takeover loan, if the rate of interest is very less, the cost is very less, yes, you can shift to the other ECB, and refinance is being permitted under automatic route. Servicing, authorized dealer with the general permission of RBI make remittance of installments, principal, interest, or other charges, and it should be in conformity with the ECB guidelines issued by the government, Reserve Bank of India from time to time. So debt servicing, that means you have to service the debt. And now, what are the procedures? Without approval of RBI, you can do it, but borrowers, he must enter into agreement with the lender. It's a normal thing, just like in bank, whenever you are going to the bank and when you are receiving the money, loan, then you have to enter into the loan agreement. It is also permitted, but everything is with reference to ECB guidelines. That is, with reference to the agreement, enter into the agreement, it should be with the ECB guidelines. And here, the borrower has to obtain loan register number from RBI. So it's a first indication. It is a foremost indication that if at all you want to buy a loan, or if you want to get a loan from abroad, and you have to get your LRN. LRN means loan registration number from RBI, from Reserve Bank of India, but this has to be obtained before you draw the money in ECB. And what are the eligible proposals? Now we are going to see the eligible proposals. That is approval report. So far we have seen the automatic. Now we are going to say only after getting RBI's permission, you can do these projects. This is coming under the category of approval route. What are the approval route is financial institutions dealing exclusively with infrastructure or export finance. That is IDFC, ILFS, Power Finance Corporation, Power Trading Corporation, ERCON, and Exim Bank. And banks and financial institutions who participated in textile or steel sector restructuring package as approved by the government, and everything is subject to the assessment of Reserve Bank of India. NBFC with minimum average maturing period, that is ECB from multilateral financial institutions, reputable regional financial institutions, official export credit agencies, international banks, and they have to finance import of infrastructure equipment for leasing to infrastructure projects. So for that it is allowed. And issue of foreign currency convertible bonds by housing finance companies. So all the FCCB issued by housing finance companies, you have to get the approval of RBI. Special purpose vehicle or any other entity notified by RBI to finance infrastructure companies projects exclusively, and multi-state cooperative societies engaged in manufacturing activity. Here it's very much important with reference to point number 6. Multi-state cooperative society, they can do even the lending also, but if they are doing in only for the manufacturing activity, you can apply for the that is approval. Under approval route, you can apply to RBI, you can get the proposal to be done. And ECB can also be raised from the eligible borrowers and recognized lenders under approval is, that is ECB can be raised from recognized sources. What are the internationally recognized sources? It is from international bank, international capital markets, multilateral financial institutions such as IFC, ADB, CDC, etc., export credit rating agencies, supplier of equipment, foreign collaborators, and foreign equity almost here other than SYL OCBs. So this you can see even from the automatic route. So just like that in automatic route, eligible borrowers are also there in the approval list. And what's the amount of maturity? That is, in addition to the automatic route, the excess amount can be transferred with RBI permission. So this is very much important. So in case if there are more than the need, if you have got the money, you can transfer the money to any account, but it should be with the permission of the RBI. And the maturity period of that amount should not exceed the 10 years under the approval route. That is, what are the costs include? Same cost which you have discussed in automatic route, that is rate of interest, other fees, expenses in foreign currency, but this excludes commitment fee, prepayment fee, fees payable in INR, withholding tax in INR, and this cost has to be reviewed by RBI from time to time. And what is the end use? Where you can, same thing which we have discussed in the automatic route. That is investment towards import of capital goods, new projects, modernization, expansion of existing units, industrial sector, infrastructure sector. Infrastructure includes power, telecommunication, railways, road, including bridges, seaport, airport, industrial parks, and urban infrastructure. And what are all called as urban infrastructure? It is water supply, sanitation and sewage products, and direct investment made in joint venture and wholly owned subsidiaries. And by way of first stage of acquisition of the shares in this investment project, and also it is mandatory in the second stage to the public under the government's disinvestment program of public sector units. And where it should not be used, that also it is there in the approval list. That is, it is not permitted for on lending or investment in capital markets or acquiring a company in India by corporate except by banks and financial institutions. It is not permitted for the real estate, working capital, general corporate purpose, and repayment of the existing rupee loan. These are all the purpose for which you cannot use the approval route. And approval guarantee, yes, it is permitted. Issuance of bank guarantee, LC, and the letter of commitment. Yes, it is permitted by banks and financial institutions, but financial institutions are not permitted. But here it's an added thing. If it is an SME unit, on merit, you can, the SME units, they can get the guarantee through the approval route. Here, approval route means you have to get the RBI permission to carry out the transaction. And as usual, security is the discussion between the borrower and lender. They have to mutually agree what are the securities they have to offer. And in case of immovable property, the charge has to be created before the registrar, and shares, the charge has to be created before SEBI. And this is the way in which you can take the security under the approval route. And now the funds, after the approval, the loans have been sanctioned, but there's a delay because in utilizing the funds as it is there in the automatic route, same thing it is here, that is parked in overseas till the same is actually recorded in India in the by way of the following deposit, that is deposits or certificate of deposits or other products offered by banks rated not less than AA minus by Standard or Poor or Fitch, IBCA or AA3 by Moody's, and deposits to overseas branch of authorized dealer in India, and treasury bills or other monetary instruments of 1 year maturity having minimum rating as indicated above. See that the funds are easily liquidated. This is a very, very important thing, because you have parked the funds outside India because that is not required here. But if immediately when you require the funds, those deposits have to be closed and the funds have to be brought into India. So the funds are easily liquidated, and yes, and when the funds are required by the borrower in India. And prepayment, yes, it is permitted, but without permission, without RBI's permission, prepayment is allowed up to 400 million. And here, so far, we have seen the automatic route and approved route. Now, what are the ways in which the ECB is being dealt with? That is freely convertible foreign currency, Indian rupee. Here we are going to discuss about the FCFC, that is freely convertible foreign currency, which includes bank loan, floating or interest, fixed rate notes, bonds, debentures, other than fully and compulsorily convertible instruments, trade credits beyond 3 years, FCCB, FCEB, and financial leases. And who are all the eligible borrowers to receive FCFC, that is foreign freely convertible foreign currency, that is all entities who are eligible to receive the foreign direct investments. Port trust, they are eligible to get the ECB under FCFC, and units in special economic zones, SIDB and Exim Bank, they are all eligible to get the money in FCFC. Now, who are all eligible to get the money in INR? INR means Indian rupee. That is bank loans, floating fixed notes, bonds, debentures, other than fully convertible, compulsory convertible instruments, trade credits beyond 3 years, and financial lease. Here, also plain vanilla rupee denominated bonds issued overseas, which either be placed privately or listed on exchanges as per the host country regulations. So plain vanilla rupee denominated bonds you are permitted, and who are all eligible borrowers for this INR ECB is, that is those who are eligible to raise FCFC, that is already the person who are eligible to raise FCFC, plus registered entities engaged in microfinance. So here microfinance activities are not included for the FCFC, but they are included in INR, namely registered and not for profit companies, registered societies, trust, cooperatives, non-government organizations. In general, so far we have seen the automatic route, approval route, and overall eligible to get it. And some few highlights I am going to discuss about the general. So ECB can be done only after taking or following the following guidelines issued by the RBI. So RBI's guidelines you have to follow. So who is responsible for ECB? It is the authorized dealer. And only with the permission of the authorized dealers, ECB can be converted into equity. So ECB cannot be converted into equity, but if at all you want to convert that amount into equity, you have to get the authorized dealer permission. So refinancing is also allowed, but it should be done only through the authorized dealers. And ECBs are also available to oil marketing companies, startup companies. And sometimes some units are under the investigation by the government. Whether they are eligible to get it, yes, they are eligible to get it, but at the time of borrower, they have to give all the cases about the litigations, all the cases pending. They have to furnish at the time of, applying for the ECB. In the application itself, they have to give all the details. So this is the first condition, first thing. And a restructuring unit. Suppose in case some units are restructuring, whether they are eligible, yes, it is also permitted, but everything you have to get the RBI permission, and it is eligible for ECB, because if ECB money, external commercial borrowing load has come, then this restructuring units may get some life. So this is also possible. And refinancing of stressed assets. Suppose their loan has to go bad. So easily, if they got the source and if they receive the money in ECB, so then it is possible. So in case any insolvency resolution process is pending, so in order to raise the money and in order to make the payment, and this is also permitted, so they can raise the source from all recognized lenders, but except from foreign branches, subsidiary of Indian banks, and for repayment of rupee term loans of the target company, it can be done only through the approval. That is, you can raise the money, you can get the refinancing of stressed assets by way of ECB, but this has to be done only with the approval of the only with the approval route. So this is what I want to say. I have given only the important highlights of the ECB, and with this I am closing the presentation now with reference to external commercial borrowing. And I thank you very much for the patient hearing and patient watching of my presentation. Please refer FEMA1999 for the detailed understanding. And with this, I am closing my today's presentation. Nandri Vanakkam.